Hey guys, this is Alan Moore, certified financial planner and founder of Serenity Financial Consulting. Thanks for joining me. So Craig is a reader on The Patch, and in response to another article I had written, he said that he had noticed or had heard about other people that had started companies with money out of their old 401ks or even an IRA, and he wanted some additional information. So as you know, if you're a regular reader of the blog or watcher of the videos, you know I don't get all legal jargon on most people, but this is one of those very technical questions, so I just want to be sure that I appease my compliance coach. So I will say I do not recommend this strategy unless you and I have sat down and talked personally. And truth be told, I probably still won't recommend this strategy to you. If you do decide to go this route, you'll need a financial advisor, a lawyer, and an accountant that have all done this type of strategy multiple times, and so it can get very expensive. And for most people, it's not a good idea. Okay, so that's my legal disclaimer. So to get started, most Americans have their entire savings in their IRAs and in their 401ks, pretty much in their retirement accounts. So as employment rates are kind of stagnantly high for older Americans, the question becomes, well, I have all this money in my retirement account, can I use it to start a business? And as you know, if you just take all the money out of your retirement account, you're going to get hit with taxes as well as a 10% penalty if you're not 59 and a half. So it can be very expensive to try and start a business with money in your retirement account. So is there a way to not take the money out of your retirement account and start a business? The short answer is yes, it actually is. The long answer is it is incredibly complicated, almost impossible to do, and incredibly expensive. So if you still want to go forward, I'll go through the steps that I've kind of identified that you can follow. Step one, think this through. Even if this was a very easy to implement strategy, I want you to really think through investing your entire retirement savings into a new startup business. Last I saw, only 1 in 5 businesses even make it 5 years. So we're talking about this is an incredibly risky strategy. When the IRS actually did a study on this strategy, they found that almost all of the businesses that had utilized this failed. Okay, either through bankruptcy, they had closed, whatever it is. So not only have they lost their business and their ability to earn income and the dream of entrepreneurship, they've also lost their entire retirement nest egg. Okay, so this can be devastating financially. So if that hasn't scared you out of it, the next step is actually that you're going to form a company that is a C corporation. This doesn't work with other entities. It's got to be a C corp. And essentially what you're going to do is issue stock in that corporation, and you're going to buy it with either a 401k or money in your IRA. So if you have a 401k, you're going to set up a new 401k in the business, roll your old 401k into a new 401k, and then purchase stock. Now, you're actually going to have to get approval from the IRS in order to do this, called a determination letter. You're going to have to ask for permission to even get started, and they carefully scrutinize these. And just because they say you can doesn't mean they won't come back on you later. They're simply going to say that, yeah, everything looks good. If you're purchasing with an IRA, you can actually move your IRA to a self-directed custodian, and they will then allow you to purchase shares of your company through the IRA. Not all custodians are friendly to this, so you may have to shop around. Okay, so what are the other important considerations here? Number one is that the IRS actually prohibits self-dealing in IRAs and retirement accounts, which is really what makes this so hard. And the root of that is that you cannot make investments directly in things that you benefit or control. So that's why this strategy doesn't work for established businesses, and it only works for startup companies. The next thing is that the IRS is not friendly to these. They don't like them. They don't want us investing retirement money into new business ventures. And the IRS actually also said in a recent report that most businesses implementing this strategy did it incorrectly. If the IRS has determined that you have done this incorrectly, you're opening yourself up basically for them to look at the retirement account and disqualify it for tax exemption, which means it's like you just did a full distribution. So you're going to get hit with Taxes, penalties, and sometimes one attorney even said that it may not even just be the 10% penalty, that the penalties can add up to where it actually equals more than the account balance was in the first place. So you could lose a lot of money by messing this up. It's incredibly complex. The next thing is, if you go through with this strategy, it's very expensive. So you can expect to spend a minimum of $5,000 to get started. You're going to have to get the company appraised and valued every year. You're going to be paying advisors that specialize in this particular strategy, so they're going to command a higher fee than your typical planner. So overall, it's going to be very expensive. So in summary, I really don't recommend this strategy pretty much for anyone. If you're starting a business, you need to have the startup capital to be able to get started, or at least the financing. If you have the money and you still decide to do this type of strategy, have a plan B. Worst case scenario, you lose everything in your retirement account, your company shuts down. What are you going to do? And if you can't fund plan B, whatever that is, if there is no plan B, please reconsider trying to implement a strategy like this. So I want to thank Jeff Rose, Kathy Curtis, and John Park, actually, for their previous work on this topic. You can, if you're viewing this on the blog, you can click the links to go check out their blogs where they have a lot of great information. There's also a link to the IRS's newsletter on this topic, so if you want some additional technical information. So that's all I have for today. Thanks so much for joining me.